Good afternoon, everyone. So, I'm going over some of the interesting outcomes for the ORB strategy combined with the Trend Predator Pro, which is something that I've recently posted in the Trend Predator channel, the playbook, and rinse and repeat setups, which we can hunt out each and every day, each and every week, um, across a handful of assets, be it gold or be it natural gas, be it the DXY index, be it one of the indexes or a currency or oil. So let's get into that. Disappointingly, I actually got caught out, and by no means am I um, suggesting that the strategy is going to be a 100% win rate strategy. And I'll just talk us through gold. Just briefly, it's ended up being potentially bullish for the day ahead, um, given that, as I stay here, um, we are above yesterday's and last week's lows. So this here really is sort of the line in the sand, as it were. Here we go. All right, so bullish above last week's lows printed last Monday and yesterday's lows printed yesterday. Um, that gives us a somewhat bullish context um, against what is otherwise actually a bearish backdrop on a multi-time frame basis. So if we were to, for instance, break back below last week's lows, then that's giving us um, a more complete bearish confluence across the time frames. We've already got a fake out high of the London high, and therefore we only really need a break below last week's lows for this then to turn bearish again. So let's get into what happened with gold. Obviously, today was the CPI data. My preference is to avoid trading data, so I don't do anything with data. I just let it play out. And then I have a strict timing window, which is after the first 30 minutes of Wall Street opening, the opening range of Wall Street, 9:30 a.m. to 10 a.m. That gives me a box, a high and low, and I'm simply looking to align my trade setups or my position in an asset with either the breakout that aligns with the Trend Predator Pro signals. So if we look at this, we had a 2-star quality setup. Um, Admittedly, I was a little bit late into the trade. I can't remember why. I was occupied with something. But straight off the bat here, as we were taking out the 8-hour low, so the London low, what did we have? We had a pretty nice looking situation. We had the price below the Asian VWAP, the London VWAP, the New York opening VWAP, the opening price. We were breaking out of the opening range to the downside, coming off the closing price where the price had been anchored to pretty much all day. So it was a nice looking uh, scenario. We've got this M formation double top pattern, wicks up top, which is always nice, a fake out high over here, and then this strong breakdown candle. So this was looking quite good, um, with a higher time frame confluence into 3 months of rise, a first red month. So plenty going on here to have warranted this trade, and a really nice uh, return on your money should this have played out. And it's starting to look good. Sorry, that's not where I entered, in fact. Bear with me. I was on a 5 minute chart, first of all. There we go. So it was starting to look good. Um, Can't actually remember where I got in now, but would have had my stop above the closing price. That's it. That was more like that. And it was a 3 for 1. So it was starting to look good as it was breaking out. I didn't, in fact, take it off the 8 hour. I do apologise. It was breaking out of the box. So coming out, it was looking quite good, and it was starting to coil. And this, at this point here, it was all or nothing really. So it was either going to go or it was going to be troublesome. So when you have this scenario, you need to be cautious. We've got a situation here where we're coming back inside of the London lows, and we've got this um, switch bar scenario. This blue bar, it's an indicator that we've created, myself and colleagues over here, which helps us read the price action. So we've got a switch bar bullish, which is not what we want to see when we are in a short, right? So, and here it was, and a switch bar bullish above the London low, not nice. And then coming right up into the breakdown level, being the Wall Street lows, and then do or die at the closing price. And unfortunately for me, it was sudden death over here. So, but wasn't wrong in going for it. It was a perfectly reasonable setup. And it was looking good also across other time frames, but I'm not going to get too much into it. It's all much the same thing, but nice 30-minute breakdown candle. And there we are. So that was gold. Now it's ended up taking out the highs, in fact, of the day, London, and it's just now moving sideways. And as I said, all we need now is to get back below those lows from last week, and we'll have a bearish context yet again, potentially a setup for Asia, and we'll have to wait and see. Otherwise, it's relatively bullish for the time being, and there's no reason why this couldn't take out the highs yet again of London as we come into a close in New York. Asia would need to get above the New York highs, and then we've got a multi-time frame bullish setup on our hands to go long into the start of the week short and back into the breakdown of last week's high bull candle, where there will be money, no doubt, for the price to be drawn to. So that was gold. And then if we look at the indexes, and I'm kind of kicking myself for not to have spotted this one, but or having spotted it, but choosing gold instead. But I think this was the better, in hindsight, this was the better setup. So we had a situation whereby Friday was an inside day, which is a signal day. I've also posted a strategy around signal days in the Trend Predator channel. So if you want to learn how to trade inside days in the way that I do, they're very powerful signal days, and if you align yourself properly with them, then, as I said, they're yeah, pretty powerful stuff. So inside day, we had this outside day on Monday. So what does that mean? It means we took out the high of the inside day. Fine, that was the trade that day, coming down through the other side of the range. Okay, so couldn't take out the highs and stay out. So instead, I mean, markets only do one of three things. They break out and pull back and continue, or they fail, or they move into a trading range. And this broke out, pulled back, and failed. So that's your thesis. And once you're below those Asian lows, you're good to go. So that was the short, and you're targeting the low of the day. Now, given that played out, and we were not able to stay on the other side of that range, well, the thesis is, as I said, markets do one of three things. They break out, they pull back, they can continue, or they fail. And this failed. So this was failing. So when you come into your trading window, and my trading window is 10 o'clock, let's get onto a 50-minute chart. Once the Wall Street high and low has been established in terms of the first 30 minutes, the opening range, which, by the way, was down here. Bear with me. Right. So there is the opening range. There's the high. There's the low. That high was tucked in just around the high of London, which is a confluence. So a breakout of that London high is your signal to be looking for a continuation trade, given that the price has come back inside of the inside day, Friday's lows, and been unable to sustain a breakdown towards a monthly fake out low level, right? So this here is a bullish scenario on the higher time frame, and we're simply trading in line with that failed breakdown from last month. So we broke the lows of last month. We pull back inside. Markets only do one of three things: they break down, they pull back and continue, or they fail, or they go into a trading range. But in this case, it's looking as though it's failing, isn't it? So we're moving up through the range of last month. So we're just getting on that train. All right, so this is where all the pieces come together. So in that respect, because we've come back to the other side of the outside day highs, we've got a failed breakout and then a failed breakdown coming back inside of Friday's lows, and we've got this beautiful A, B correction, C continuation leg, and all we're doing is we're getting on that journey, and we're getting in here on a 5-minute chart. You can look at that as an entrance on the 5-minute close, and I mean, in this case, we've got a stop loss below the highs of the prior day, so that breakout level, for a very nice risk to reward up into the previous week's highs, level to level. Okay, so that was for me the ideal setup really on the day. And we had similar scenarios on the S&P, the indexes essentially. So I'll leave that breakdown there. Those for me were the most compelling setups. And I hope that helps in terms of understanding how we can use the opening range of the Wall Street Open, and for that matter, any other equities open. The same thing can play out for London and Asia, Tokyo, and the FTSE opening range, first 30 minutes of the open. Combining the moving averages, the VWAPs, all aligning with the trend. Trading momentum, trading with the trend, and the trend predator does all the work for you. It shows you what the context is. It tells you what bias is, whether it's a bullish trend or not. It even gives you the quality of what kind of trend it is. So it's very handy. So if putting all these pieces together, you end up with an edge and a formula for succeeding in what is a beatable game. As I said, these setups are not always going to work out, and it's really about selecting the best setup, the best engineered chart to give yourself an edge. Even though there is an edge where you can fail and still you're trading with an edge. But as I said, you can't always be guaranteed to win. It's about managing your risk, sticking to the rules, trading your strategy, being disciplined, turning up, doing the work, and you get an overall positive outcome. Okay, let's see how we get on for tomorrow.